Good morning and welcome to this month's Oakcrest Insight. Now, over the last few months, you, like myself, have probably spent a lot of time working on your taxes, right? Gathering your tax documents, working on your 2022 taxes, finding out whether you owe more in taxes or that you're going to get a refund, right? So with taxes on everyone's mind right now, I wanted to share and talk a little bit about maybe a few tax planning ideas for you to think about here in 2023. Now, to put a disclaimer on all this, some individuals, this may not apply to any of these. A few of them, or some you might have all of them apply to you. But our goal this year and going forward is to really talk more about options individuals and business owners utilize to minimize their taxes. So first, let's talk about if you're working. Retirement plans at work. You're going to see on the screen here updated contribution limits for retirement plans. So if you're under age 50, you could potentially contribute up to $22,500 a year. And if you're over 50, there's a catch-up and you can contribute up to $30,000 this year. Now this is a substantial amount potentially to defer in taxes, not including any match from your employer. Another option, if you don't want to defer the taxes, is pay the taxes today and look at Roth accounts. So many of our clients, unfortunately, are phased out because they make too much money from contributing to Roth IRAs. But attached are the phase-out limits for you to look at, individuals and joint accounts, to be able to contribute to a Roth IRA. So if you can't, many retirement plans now at work offer a Roth 401k as an option to potentially contribute up to $30,000 a year to that Roth 401k. Another option with Roth are Roth conversions. You've probably heard many financial experts discuss Roth conversions. The magic question when considering these are not only what your tax rate is today to pay the taxes, but what tax rate you will be in the future when you pull the funds out, and that unfortunately we have no idea. So Roth may or may not be the best for your situation, but the benefit of Roth accounts is the ability to pull the funds out tax-free in the future if you meet certain criteria. Now, we like to talk about diversifying across investments, but also taxes too. So you got tax deferred, tax-free coming out, and taxed along the way. There's the ability to do tax loss harvesting when markets have a downturn in after-tax accounts like last year. So it's sometimes a good time to lock in some of those losses to offset potential tax gains in after-tax accounts. So this can help minimize potential taxes and take advantage of these market downturns when they happen. Some of you may be charitably minded, right? So with the joint deduction now at $27,500, it's hard to be able to deduct your charitable contributions on your taxes as they may not be more than the joint deduction. Now, 86% of tax filers use this standard deduction now versus itemizing. So a couple items, if you do give money to charities that you may take advantage of, is this. First, if you're taking RMDs, right, required minimum distributions, you can actually donate all or a portion of that required amount to a charity or multiple charities to not have to pay taxes on that amount that comes out of there. There's other things called donor advised funds, where you become eligible for a tax deduction on money you put in there, but can support any IRS qualified charity on a timetable that best suits you. A lesser known option here, but it's actually donating appreciated stock to these donor advised funds. And by doing this, you could potentially avoid the taxes on the gain in the stock. You get a charitable deduction for that as well, and the charity eventually will benefit from this. So this can be complex, but it's something we do and discuss many times for our clients. Lastly, from charitable minded, maybe you want to gift money to kids, grandkids, or even your parents, right? To potentially minimize taxes. This gifting exclusion now for 2023 is $17,000. There are many more potential options. I just highlighted a few here, depending on your situation. So later this year, now we're working on this, I'm fingers crossed, on having a tax part to our practice. We hope this is going to be able to have somebody here be a part of our team to review your returns, not to challenge how they're prepared, but to quantify it, say, hey, here's tax savings potentially for you on a couple options. I hope this was helpful as we help you think about not only how to minimize taxes today, but also in the future as well. We look forward to seeing you next month on Oakcrest Insight.